The tech world stood still last week. A single press release and the Oracle stock shot up over 27% in a single day. The company, once dismissed as a sluggish technology dinosaur, has suddenly taken on the lead role in the AI revolution. Analysts who had been shrugging off Oracle for years were left speechless. But why was this quarter so unbelievable? Today, we're diving deep into the story that has electrified the market. The trigger wasn't a conventional metric, but the remaining performance obligations, RPO. This value soared to an incredible $455 billion, a 359% increase compared to the previous year. This is the ultimate hype, but it's real. These are massive, contractually secured revenues that Oracle will realize in the coming years. A large part of this sum comes from the hottest product the company has ever had, the Oracle Cloud Infrastructure, OCI. Companies like OpenAI, Meta, NVIDIA, and AMD have chosen Oracle to train the next generation of AI models. The RPO surge is proof that the hype around the product is driving demand, and that the company has secured a seat at the table of the AI giants. To truly understand the transformation, we have to look at the fundamentals. What really stood out to me in the numbers are two things: the accelerating revenue growth and the big difference between the old and new business segments. For years, Oracle's revenue grew at a single-digit rate. The data shows us that revenue has increased slowly in recent years, but now everything points to a dramatic turnaround. Forecasts show how total revenue is set to climb from around $42 billion in 2022 to over $97 billion by 2028. This is a clear sign that Oracle has entered a new, very profitable phase of growth. The numbers we have in front of us clearly show the business's turning point. On one side, we have the classic applications, cloud services, and license support business. As the numbers show, it's the reliable backbone that is growing steadily. In 2023, its revenue was $16.6 billion, in 2024, $18.1 billion, and in 2025, $19.3 billion. On the other side, we see the real star, the infrastructure, cloud services, and license support business. It is the fastest growing segment and the engine that's driving the entire company into the future. Revenues for this segment rose from $18.6 billion in 2023 to $21.2 billion in 2024, and further to $24.6 billion in 2025. This is the decisive story. Profitability is also on the rise. We see that operating profit is expected to climb from just under $11 billion to over $40 billion by 2028. This means the operating margin will rise from around 30% to an impressive 41.6%. This proves the extreme scalability of the cloud business, and free cash flow perfectly mirrors this transformation. Initial investments temporarily pushed it down, but then it soared to over $14 billion. The fundamentals are clear. But what about the chart? This is where it gets personal, because I sold my position before the surge even came. My plan worked. I had a clear target, and the chart proved me right. After the quarterly numbers, the stock exploded from $256 to up to $346. It hit exactly my overarching target of $305 to $360. It was as if the chart was saying to me, "You were right." And, as expected, it initiated a correction from there and is currently trading at around $292. This correction is the phase that gives the company time to grow into its value. Over the next few years, the value could slowly align with the fundamentals and position itself for a new rally. There's also an alternative scenario I'm keeping an eye on. If the hype continues and the stock accelerates again, it could rise to the range between $360 and $450. In this case, I might even consider a small short position. I see that as a risk worth taking. But a clear red line that would confirm everything is the support level at $219. If the stock falls below that mark, we are 100% in a major correction. The impressive performance of Oracle is more than just hype. It's based on building a massive, contractually secured pipeline of future revenue and the acceleration of its most important growth segment. The stock is a bet on the successful transformation of an old giant. Whether this bet pays off in the long run depends on how well the company can deliver on its promises. The technical analysis gives us a concrete roadmap for the coming years. It shows that the fundamentals and the chart align.